On March 15th, 2023, something happened that should have been front-page news everywhere, but most Americans missed it completely. Saudi Arabia announced it would accept Chinese yuan for oil sales to China. Not dollars, yuan. For the first time in 49 years, the world's largest oil exporter agreed to sell its most critical commodity in a currency other than the US dollar. The petrodollar monopoly, established in 1974, was broken. This wasn't just a trade deal, this was stage 6 of an 8-stage collapse pattern that has destroyed every reserve currency in history. The Portuguese real collapsed in the 1600s. The Dutch guilder collapsed in the 1700s. The British pound collapsed in the 1900s. And now the US dollar is following the exact same pattern, stage by stage, crisis by crisis. And we're entering the most dangerous phase where alternatives gain critical mass and the collapse accelerates exponentially. Here's what most people don't understand. Reserve currency status isn't permanent. It's a cycle that lasts 80 to 110 years. The currency rises, it dominates, it overextends. Competitors emerge, confidence cracks, alternatives gain adoption, crisis accelerates, and replacement happens. We've seen this pattern 3 times in the last 500 years. And every single time, the dominant power refused to believe its currency could fall. They thought they were different. They thought their system was too big to fail. They were wrong. All of them. The dollar is currently in stage 6 of 8. Alternatives are gaining adoption. The petrodollar is cracking. BRICS nations are building parallel systems. And the timeline, based on historical patterns, says we have 10 to 15 years before the dollar loses reserve status entirely. Not eliminated, but no longer dominant. And when that happens, America's ability to print money and export inflation ends. The $36 trillion debt becomes unpayable. Interest rates spike. Living standards fall 30 to 40%. This is the most important economic story of our lifetimes, and almost no one is paying attention. Let me show you the exact 8-stage pattern that destroyed 3 previous reserve currencies, where the dollar is right now in that pattern, the specific mechanisms that are accelerating the collapse, why the petrodollar's death is different and faster than previous transitions, who profits enormously and who gets destroyed, and what the timeline looks like based on historical precedent. Because this isn't speculation, this is pattern recognition. And the pattern is screaming that the dollar's dominance is ending. Before I show you the 8-stage pattern, you need to understand what a reserve currency actually is and why it matters. A reserve currency is the currency that countries around the world hold as their primary foreign exchange reserves. Central banks accumulate reserves to facilitate international trade, pay debts, and stabilize their own currencies. When a currency becomes the reserve currency, it creates massive advantages for the issuing country. First, structural demand. If every country needs dollars to trade internationally, they must constantly buy dollars. This creates permanent demand regardless of the underlying economy. Second, seigniorage. The issuing country can print money and exchange it for real goods from other countries. You print paper. They give you cars, electronics, oil. This is an extraordinary privilege. Third, cheap borrowing. Because everyone needs your currency, they buy your government bonds. This lets you borrow at lower interest rates than economic fundamentals justify. Fourth, exported inflation. When you print money, the inflation is spread globally because everyone holds your currency. Your inflation becomes the world's problem. These 4 advantages are why reserve currency status is the ultimate economic weapon. But it's also why losing it is catastrophic. When your currency is no longer needed for trade, demand collapses. Your government can't borrow cheaply anymore. You can't print money without causing immediate domestic inflation. Your living standard, inflated by decades of seigniorage, crashes back to what your actual economy can support. This is what happened to Portugal, the Netherlands, and Britain, and it's what's beginning to happen to America. Now let me show you the 8-stage pattern. This framework applies to all 3 previous reserve currency collapses, and it's playing out with the dollar right now. Stage 1 is dominance established through economic and military superiority. A currency becomes the reserve currency because the issuing country is the dominant economic and military power. This creates trust. Everyone believes this country and its currency are stable, backed by real strength. Portugal in the 1500s controlled the spice trade. Portuguese ships dominated the route around Africa to India and the East Indies. Spices, pepper, cinnamon, cloves were worth more than gold by weight. Portugal controlled this trade through military superiority at sea and strategic ports like Goa, Malacca, and Macau. The Portuguese real became the currency of Asian trade. Merchants needed reals to buy spices. This made the real the reserve currency of Indian Ocean trade. The Dutch Republic in the 1600s had the most efficient economy in Europe. Amsterdam was the trading capital of the world. The Dutch East India Company, VOC, was the richest corporation ever, worth $7.9 trillion in modern terms. Dutch ships controlled Baltic trade, Asian trade, and New World trade. The guilder became the reserve currency because Dutch financial markets were the most sophisticated. The Amsterdam Stock Exchange, founded in 1602, was the world's first. The Bank of Amsterdam, founded 1609, was the world's most trusted bank. Everyone held guilders because Dutch finance was the safest and most liquid. Britain, after defeating Napoleon in 1815, was the global superpower. The Royal Navy controlled the seas. British industry dominated manufacturing. The British Empire covered 1/4 of the world's land and population. The pound became the reserve currency because Britain controlled global trade. The gold standard, established by Britain, meant pounds were convertible to gold at fixed rates. This made pounds as good as gold. By 1900, 60% of international trade was invoiced in pounds. After World War II, America had 50% of global GDP. The U.S. military was unchallenged. The Bretton Woods Agreement in 1944 made the dollar the official reserve currency, convertible to gold at $35 per ounce. Other currencies pegged to the dollar. The dollar was as good as gold because America held most of the world's gold reserves. Even after Nixon ended gold convertibility in 1971, the dollar remained dominant through military power and the 1974 Petrodollar agreement with Saudi Arabia. Stage 1 established dominance, but dominance doesn't last forever. It contains the seeds of its own destruction. Stage 2 is peak power and overextension. At the height of power, the dominant country overextends. It fights wars it can't afford. It borrows excessively. It prints money to fund imperial projects. The currency remains strong because of inertia. Everyone still needs it, but the fundamentals are weakening. Portugal at peak power controlled the entire Indian Ocean spice trade, but it overextended. Portugal tried to maintain military presence in dozens of ports from Mozambique to Macau. Small population, 1 million people in Portugal itself, couldn't sustain global empire. Wars with rival European powers drained resources. Portugal borrowed heavily from Italian and German bankers. By 1560, debt service consumed 60% of royal revenues. The real remained strong because of spice monopoly, but the empire was overextended. The Dutch at peak controlled global shipping, but they fought 3 wars with England, 1652 and 1674, and multiple wars with France. Military spending soared. The Dutch economy, based on trade and finance, couldn't support large-scale land wars. The Dutch East India Company, while still profitable, faced increasing competition from the English East India Company. By 1700, the Dutch were spending more on defense than they earned from trade. Debt accumulated. But the guilder remained reserve currency because of Amsterdam's financial infrastructure. Britain at peak in 1870 controlled the largest empire in history, but by 1900 competitors emerged. Germany industrialized rapidly. America's economy surpassed Britain's by 1890. Britain fought the Boer War, 1899-1902, which cost $200 million, 10% of annual GDP. Britain maintained the world's largest navy at enormous cost. The pound remained dominant, but Britain was borrowing to maintain empire. By 1914, Britain was a net debtor to America. America at peak in 1950 had no rivals. But Vietnam War, 1964-1975, cost $168 billion, forcing Nixon to end gold convertibility in 1971. Military spending continued with Cold War, Gulf Wars, Iraq, Afghanistan. By 2008, U.S. debt was $10 trillion, but the dollar remained reserve currency because there were no alternatives. Petrodollar system, established in 1974, meant oil could only be bought in dollars, creating structural demand. Stage 2 is overextension while maintaining currency dominance through inertia. Stage 3 is when competitors emerge and build alternative systems. Other countries, watching the dominant power overextend and abuse its privilege, begin building alternatives, not to replace the reserve currency immediately, but to reduce vulnerability. Spain, England, and the Dutch all built rival trading companies to Portugal. The English East India Company, founded 1600, and Dutch East India Company, founded 1602, competed with Portugal for Asian trade. These rivals offered better ships, better financing, and more efficient trade networks. Portuguese monopoly cracked. By 1620, the Dutch controlled most of the spice trade. The real was still used. But alternatives existed. Britain built financial infrastructure to compete with Amsterdam. The Bank of England, founded 1694, offered stability. London's financial markets grew. France, under Louis XIV, tried to create alternative financial centers. The Dutch guilder remained dominant, but London was rising. By 1750, British trade volume exceeded Dutch trade. The guilder remained reserve currency, but Britain's pound was gaining. America emerged as Britain's rival. World War I had devastated British finances. Britain borrowed $1.2 billion from America to fight the war. After WWI, Britain was deeply in debt to America. America's economy surpassed Britain's. The Federal Reserve, created in 1913, provided alternative financial infrastructure. New York competed with London. The pound remained reserve currency, but the dollar was rising. The 2008 financial crisis showed the dollar system's fragility. China, Russia, and other nations began building alternatives. China created CIPS, Cross-Border Interbank Payment System, in 2015 to rival SWIFT. Russia created SPFS, System for Transfer of Financial Messages, its own payment system. BRICS nations discussed creating a common currency. These systems weren't meant to replace the dollar immediately, but to provide alternatives if America weaponized the dollar. Stage 3 is when alternatives are built defensively. Stage 4 is currency weaponization accelerating alternative adoption. The dominant power, facing challenges, uses its currency as a weapon. Sanctions, asset freezes, exclusion from payment systems. This backfires. Targets accelerate development of alternatives. And neutral countries, watching, realized they're vulnerable and hedge by diversifying away from the dominant currency. Portugal, weakening, tried to exclude rival traders from its ports. Portuguese officials seized Dutch and English ships in Asian ports. This forced rivals to build their own port networks. The Dutch established Batavia, Jakarta, as alternative trading hub. England built Fort St. George, Madras. Portugal's weaponization of trade access accelerated rival systems. By 1600, Portugal couldn't exclude competitors because competitors had built parallel infrastructure. Britain, at war with France, blockaded Dutch ports during the Fourth Anglo-Dutch War, 1780-1784. Dutch trade collapsed. Guilder lost value. Dutch merchants, unable to use traditional routes, began using London banks instead of Amsterdam. Britain's weaponization of sea power destroyed Dutch dominance. Amsterdam's role as financial capital ended. London replaced it. During World War I, Britain froze German assets in London through the Trading with the Enemy Act, 1914. This showed that British banks weren't safe during conflict. After WWI, neutral countries reduced pound holdings, fearing Britain would freeze assets again. The Great Depression, 1931, forced Britain off the gold standard, devaluing the pound by 30%. Trust evaporated. Countries diversified reserves to dollars and gold. Britain's weaponization of finance during WWI accelerated the pound's decline. America's weaponization of the dollar accelerated dramatically in two phases. First, 2014 sanctions on Russia after Crimea annexation. Russia was excluded from some dollar transactions. Russia responded by reducing dollar reserves from $130 billion in 2013 to near zero by 2020. Russia increased gold reserves from 1,000 tons to 2,300 tons. Russia developed SPFS payment system. Second, 2022 sanctions after Ukraine invasion. America froze $300 billion in Russian central bank reserves. Russia was cut off from SWIFT. This was the nuclear option. And it backfired catastrophically. Every country watching realized dollar reserves can be frozen. SWIFT access can be removed. Your wealth isn't safe if America decides you're an enemy. The result was mass de-dollarization. China reduced U.S. Treasury holdings from $1.3 trillion in 2013 to $775 billion in 2024. Saudi Arabia diversified reserves, reducing dollar share from 90% to 70%. Central banks globally bought 100 tons of gold in 3 years, 2022 to 2024, the highest since 1970s. Countries built alternative payment systems. The weaponization that was supposed to punish Russia instead convinced the entire non-Western world to build alternatives to dollar dependence. Stage 4 is when weaponization accelerates de-dollarization. Stage 5 is confidence cracks and reserve share begins falling. After weaponization demonstrates vulnerability, countries actively reduce holdings of the dominant currency. Reserve share falls from peak to early decline. The stage can last 10-30 years, but it's irreversible once started. After Dutch and English alternatives emerged, merchants reduced real holdings. By 1640, the real represented less than 20% of Asian trade currency, down from 60% in 1580. The decline took 40 years, but once started, it accelerated. After British blockades damaged Dutch trade, the guilder's reserve share fell. In 1780, the guilder was 40% of European reserves. By 1815, less than 10%. The Napoleonic Wars destroyed what was left of Dutch financial dominance. Amsterdam was occupied by France. Dutch trade collapsed. The guilder declined from 40% to irrelevance in 35 years. World War I destroyed British finances. Britain borrowed heavily from America. After WWI, the pound was weakened. Sterling's share of reserves fell from 60% 1913 to 50% 1930 to 30% 1940. Bretton Woods, 1944, formalized the dollar's replacement of the pound. The pound declined from dominance to secondary status in 30 years. The dollar's reserve share peaked at 71% in 1999. By 2024, it's 58%. That's a 13 percentage point drop in 25 years. Not fast, but consistent and accelerating. The last 2 years saw a 4 percentage point drop. At this rate, the dollar falls below 50% by 2030, below 40% by 2035. This is stage 5. The decline is visible, irreversible, and accelerating. Stage 6 is alternatives gain critical mass and network effects flip. This is the danger zone. Alternative systems reach critical mass where using them becomes easier than using the dominant currency. Network effects, which previously favored the dominant currency, flip. Merchants prefer alternatives because customers prefer alternatives. The spiral accelerates. By 1640, Dutch and English trade networks were more extensive than Portuguese. Merchants preferred Dutch guilders because they could trade in more ports, access better financing, and ship on more reliable fleets. The real was still used in Portuguese colonies. But global trade shifted to guilders. Once the network effect flipped, the real's decline was rapid. After Napoleon, Amsterdam never recovered its financial dominance. London's financial markets were larger, more liquid, and backed by stronger military. The Bank of England was more trusted than the Bank of Amsterdam. Merchants preferred pounds because London offered better credit, insurance, and shipping. The guilder became a regional currency. The pound became global. World War II destroyed Britain's economy. Britain borrowed $30 billion from America. After the war, Britain was bankrupt. The 1956 Suez Crisis showed Britain couldn't act without American approval. America threatened to crash the pound if Britain didn't withdraw from Suez. Britain complied. From that moment, everyone knew the pound was subordinate to the dollar. The network effect had flipped. Merchants preferred dollars because America was more powerful. We are entering stage 6 right now. March 2023 saw Saudi Arabia accept yuan for oil. This breaks the petrodollar monopoly. December 2024 saw Saudi Arabia join BRICS, signaling diversification away from exclusive U.S. alignment. China's CIPS payment system processed $27 trillion in 2023, up from $12 trillion in 2020, more than doubled in 3 years. BRICS announced plans for a common currency backed by gold and commodities. Brazil and Argentina are negotiating bilateral trade in local currencies, bypassing dollars. India and Russia trade in rupees and rubles. UAE accepts yuan for oil from China. The alternatives are gaining critical mass. Here's the key metric. In 2022, 73% of international trade was invoiced in dollars. By 2024, it's 58%. That's a 15 percentage point drop in 2 years. This is the network effect flipping. Merchants are choosing non-dollar currencies because their trading partners accept non-dollar currencies. The spiral is starting. Stage 7 is crisis acceleration and panic diversification. Once the network effect flips, a crisis accelerates the collapse. War, financial crisis, or policy mistake triggers panic. Countries dump reserves, the currency crashes. The dominant power tries to stop the fall, but it's too late. The alternatives are too strong. The War of Spanish Succession, 1701 to 1714, destroyed what remained of Portuguese trade. Portugal sided with Britain. France blockaded Portuguese ports. Portuguese trade in Asia collapsed entirely. By 1720, the real was worthless outside Portugal. Napoleon's continental system, 1806-1814, blocked British trade with Europe, but it also destroyed Dutch trade. Amsterdam, occupied by France, was cut off from colonies. The guilder crashed. After Napoleon's defeat, the guilder never recovered. It became a minor currency. World War II was the crisis for Britain. Britain spent everything fighting Germany. By 1945, Britain owed $30 billion, 3 times GDP. Britain was bankrupt. The pound was devalued 30% in 1949. India gained independence in 1947, ending the jewel of the empire. The Suez Crisis, 1956, was the final humiliation. The pound collapsed from global reserve to regional currency in 15 years. The crisis for the dollar is coming. It could be triggered by multiple factors. First, BRICS currency launch. If BRICS successfully launches a gold-backed currency for international trade, it creates a credible alternative. Oil producers might accept it. This would break dollar demand. Second, U.S. debt crisis. Federal debt is $36 trillion, interest payments $1.2 trillion annually. If bond markets lose confidence, yields spike. The Fed must print money to buy bonds. Inflation surges. Dollar crashes. Third, military overextension. If America is simultaneously committed in multiple conflicts, Taiwan, Ukraine, Middle East, and can't win decisively, credibility collapses. Fourth, commercial real estate defaults causing banking crisis. If 1,000 regional banks fail due to commercial real estate, confidence in U.S. financial system breaks. Any of these could trigger stage 7, crisis acceleration, panic diversification. Countries dump treasuries. The dollar falls 30-50% against other currencies in months. This forces the Fed to raise rates dramatically to attract capital, causing recession, or print money dramatically to buy treasuries, causing inflation. There's no good option. Stage 7 is the collapse. Stage 8 is replacement and new dominant currency emerges. After the crisis, a new reserve currency emerges. Not immediately, but over 5 and 10 years, one currency becomes the new standard. The old currency still exists, but it's no longer dominant. The guilder replaced the real gradually. By 1680, most international trade used guilders. The real remained Portugal's domestic currency, but globally irrelevant. The pound replaced the guilder gradually. By 1815, most international trade used pounds. The guilder remained the Netherlands' currency, but no longer global. Bretton Woods, 1944, made the dollar the official reserve currency, but the transition took 15 years. In 1950, the pound was still used widely. By 1960, the dollar was clearly dominant. By 1970, the pound was secondary. The replacement for the dollar isn't clear yet. 3 possibilities. First, Chinese yuan. If China's economy continues growing and CIPS becomes the dominant payment system, the yuan could replace the dollar. But the yuan has problems: capital controls, lack of transparency, authoritarian government that could freeze assets. Second, multipolar system. Euro, yuan, and dollar all coexist as regional reserve currencies. No single dominant currency. Third, gold or gold-backed currency. If BRICS currency is genuinely backed by gold and commodities, it could become neutral reserve alternative. The replacement will be determined by which system offers most stability, liquidity, and trust. Now let me show you why the petrodollar's death is different and faster than previous transitions. Previous reserve currency transitions took 30-50 years from peak to replacement. The dollar's transition will be faster. 20-30 years from peak, 2000, to replacement, 2030-2050. Why? First, technology accelerates everything. In 1914, moving gold reserves between countries took weeks. Ships, railroads, physical transport. Today, moving billions in reserves takes seconds. Digital transactions. This means de-dollarization can happen much faster. Countries can dump treasuries and buy yuan or gold in minutes. Previous transitions were slow because logistics were slow. This transition will be fast because digital finance is instant. Second, alternatives already exist. In 1940, when the pound was failing, there was only one alternative: the dollar. America was the only economy large enough to be reserve currency. Today, there are multiple alternatives: the yuan, the euro, gold, BRICS currency, cryptocurrency. This means countries can diversify immediately. They don't need to wait for an alternative to be built. The alternatives are ready. Third, the petrodollar was artificial. The Portuguese real, Dutch guilder, and British pound were backed by real economic dominance: trade, manufacturing, financial sophistication. The petrodollar since 1974 has been backed by an agreement with Saudi Arabia, oil only in dollars. But that agreement was political, not economic. Once the political relationship weakens, the petrodollar ends instantly. And it's weakening now. Saudi Arabia is diversifying relationships, accepting yuan, joining BRICS. The petrodollar was always vulnerable because it was based on a single bilateral agreement, and that agreement is ending. Fourth, America is more indebted than previous reserve powers. Portugal, the Netherlands, and Britain had debt problems, but nothing like America's $36 trillion, 120% of GDP. When the dollar loses reserve status, America can't finance deficits. Interest rates spike. Austerity or hyperinflation. Previous transitions were slow, partly because the declining power could manage decline gradually. America can't. The debt forces rapid adjustment. Fifth, globalization means faster contagion. In 1940, if Britain had a currency crisis, it affected the empire and some trade partners. Today, if America has a currency crisis, it affects the entire global economy instantly. $80 trillion in dollar-denominated debt globally. $21 trillion in U.S. money supply. $13 trillion in U.S. treasuries held by foreigners. If confidence breaks, the selling pressure is immediate and global. Previous transitions were regional. This transition is global. That makes it faster and more chaotic. Now let me show you the timeline based on where we are in the pattern. 2000 to 2008 was peak dollar dominance, 71% reserve share. Petrodollar unchallenged, America's military dominance after Cold War victory. This was stage 2, peak power. 2008 to 2014 saw the financial crisis damage confidence. China begins building CIPS. Countries question dollar safety, but no alternatives exist yet. This was stage 3, competitors building alternatives. 2014 to 2022 saw Russia sanctions, 2014, and COVID money printing 2020 accelerate concern. Russia de-dollarizes. China expands CIPS, but system still holds. This was stage 4. Currency weaponization begins. 2022 to 2023 brought the Russia SWIFT cutoff and 300 bait reserve freeze. This is the watershed moment. Every country realizes dollar reserves can be seized. Mass de-dollarization begins. March 2023 sees Saudi accept yuan. This breaks petrodollar monopoly. This was the transition from stage 4 to stage 5. 2023 to 2025 sees reserve share fall from 60% to 58%. Trade share falls from 73% to 58%. Central banks buy 1,000 plus tons of gold annually. BRICS expands to 9 members. CIPS volume doubles. This is stage 5. Confidence cracks, entering stage 6. Alternatives gaining mass. 2025 to 2030 will likely see BRICS currency launch. Projected 2026, 2027. More countries accept non-dollar oil payments. Dollar reserve share falls below 50%. Trade share falls below 50%. Network effects flip. Using alternatives becomes easier than using dollars. This will be stage 6, critical mass reached. 2030 to 2035 is when crisis triggers panic. Possible triggers include BRICS currency success, US debt crisis, military overextension, banking crisis, dollar crashes 30-50%. Fed forced to choose. Print money, inflation, or raise rates, depression. This will be stage 7, crisis acceleration. 2035 to 2050 is when new system emerges. Either yuan dominance, multipolar system, or gold-backed BRICS currency becomes primary. Dollar remains a major currency, but no longer the reserve currency. This will be stage 8, replacement. This timeline is based on historical patterns. Could be faster if a major crisis hits sooner. Could be slower if America successfully defends dollar dominance. But the direction is locked. The dollar is declining, and the decline accelerates. Now let me show you who wins and who loses. Gold holders win massively. When reserve currencies collapse, gold surges. During British pound decline, 1940-1960, gold went from $35 Oz, official price, to eventually 850 Federal Oz by 1980, when fully floated. 24x gained. During dollar's gold convertibility end, 1971, gold went from $35 to $800 by 1980, 23x gain. BRICS nations win. China, Russia, India, Brazil, South Africa, plus new members Saudi Arabia, UAE, Iran. These countries gain economic independence from US-controlled financial system. They can trade and own currencies, hold reserves and diversified assets, avoid sanctions. Their geopolitical power increases as US power declines. Commodity exporters win. If oil, gas, metals, food can be sold in multiple currencies instead of just dollars, exporters have more leverage. They can demand better prices. They can choose currency that maintains value. Saudi Arabia accepting yuan gives them negotiating power. They're no longer dependent on dollar system. Countries with low debt win. Switzerland, Norway, Singapore, Germany. Countries with strong economies and low debt benefit from dollar decline because they can attract capital fleeing dollar. Their currencies strengthen. They become safe havens. America loses the most. America's entire economic model for 50 years has been print dollars, buy real goods from other countries, maintain living standard above what economy produces. This is the exorbitant privilege of reserve currency. When that ends, American living standards fall. The trade deficit, $800 billion annually, becomes unsustainable. America must export more or import less. That means fewer goods, higher prices, lower consumption. Estimates say 20 to 30% decline in living standards over 10 to 15 years as dollar privilege ends. Dollar savers and bondholders lose. If you hold dollars, treasuries, dollar bank accounts, you lose purchasing power. Dollar devaluation of 30-50% means your wealth loses 30-50% of international purchasing power. A $1 million treasury portfolio becomes worth 500K, 700Ks in real terms. Domestic inflation might be lower if US government controls prices, but global purchasing power collapses. Countries with dollar-denominated debt lose. Developing nations owe $13 trillion in dollar debt. If dollar strengthens temporarily before collapse, as creditors demand higher rates, this debt becomes more expensive to service. But if dollar collapses, these countries' dollar revenues from exports decline while dollar debts remain fixed. Either way, dollar debt holders are squeezed, Wall Street and big banks lose. U.S. financial industry's dominance depends on dollar dominance. If international trade shifts to yuan, euro, or BRICS currency, transactions clear through Shanghai, Frankfurt, or Dubai instead of New York. Banking revenues fall, financial sector employment falls. New York's status as financial capital erodes. U.S. government loses ability to fund deficits. Right now, U.S. borrows $2 trillion per year. Foreigners buy $1 trillion in treasuries to get dollar reserves. When foreigners no longer need dollar reserves, they stop buying treasuries. Who funds the deficit? Either Fed prints money, inflation, or government cuts spending dramatically, politically impossible, or government raises taxes dramatically, economically destructive. All options are bad. The wealth transfer from dollar holders to non-dollar asset holders will be the largest in history. Trillions shifting from America and dollar holders to BRICS nations and commodity-notch gold holders. Let me end with this. The 8-stage reserve currency collapse pattern has destroyed 3 currencies in 500 years. Portuguese real, Dutch guilder, British pound. Each time, the dominant power believed its currency was different, too important, too big to fail. Each time they were wrong. The decline took 30-50 years. But once it started, it was irreversible. The US dollar is in stage 6 of 8. Alternatives are gaining critical mass. The petrodollar monopoly, established in 1974, broke in 2023 when Saudi Arabia accepted yuan. This wasn't just a trade deal. This was the network effect beginning to flip. When the world's largest oil exporter sells in non-dollars, it signals to every other country, you don't need dollars anymore. And once that signal is sent, the spiral accelerates. The timeline, based on historical patterns and current acceleration, says we have 10-15 years before the dollar loses reserve status, not eliminated, but no longer dominant. Dollar share falls from 58% to 35-40%. Trade share falls from 58% to 30-40%. This is a multipolar currency world. When 20-25%, Euro 20-25%, dollar 35-40%, gold, BRICS currency, 15-20%. No single dominant currency. And when that happens, America's 50-year free lunch ends. The ability to print money and buy real goods ends. The $36 trillion debt becomes unpayable. Living standards fall. This is the cost of losing reserve currency status. Britain experienced it 1940, 1970. America will experience it 2025, 2050. The pattern is clear. The stages are defined. We're in stage 6. The collapse is accelerating, and no one can stop it. Because reserve currency dominance isn't permanent. It's a cycle, and every cycle ends. The Portuguese real collapsed. The Dutch guilder collapsed. The British pound collapsed. And now the US dollar is collapsing. Not tomorrow, but inevitably, stage by stage, crisis by crisis, until the replacement comes. If this documentary showed you a pattern you didn't know existed, if you understand now that reserve currencies follow an 8-stage collapse cycle and the dollar is in stage 6, then you need to subscribe, because over the next 10 years, I'll track every stage of this collapse. Every BRICS development, every de-dollarization milestone, every sign that stage 7 is approaching, the petrodollar is dying, the dollar's reserve status is ending. The 8-stage pattern is playing out exactly as it did 3 times before. History doesn't repeat, but it rhymes. And right now it's rhyming with Portugal in 1640, the Netherlands in 1800, and Britain in 1945. The dollar's dominance is ending. The timeline is 10 to 15 years. Position accordingly.